All right, we're live. Hey there, everyone. It's Mitch Goldberg. Welcome to Be the Boss of Your Money. Couple things to talk about today. This is Be the Boss of Your Money. I should call it Money Control. I want to help you become the boss of your money. I want to help you take control of your money. I thought Be the Boss of Your Money was a good name. It's still a good name, but maybe I could have called it Money Control or Money Knowledge, or I don't know, Dollaretical, like theoretical. You try to think of a catchy name, but Be the Boss of Your Money is it. We have a couple of things to talk about. So, what is the number of the day? I don't always do a number of the day, but when I do, I go all in. I'm going hardcore on the number of the day. 31. 31 is the number of the day. That is the number of Abrams tanks that the United States is sending to Ukraine. 31 M1A1 tanks. I've been studying these tanks a little bit. They're like monster engines, 1,500 horsepower. They could withstand almost pretty much anything you could throw at it. They're the most hardest to penetrate tanks in the world. They could, not a direct one, but they could theoretically survive a nearby nuclear blast. They could shoot down aircraft. They could shoot other tanks. They could level a battlefield of troop personnel. One bullet from their machine guns would destroy, artillery. It would just one bullet would just cause enough damage to a piece of artillery to make it unusable. The massive firepower, the destruction capabilities of these machines are remarkable. And we're sending it along with Germany, who has from what I understand, the number one tank in the world. Not because it's the toughest, but it is very tough, but because it's the fastest, most maneuverable. And although it has smaller armaments, they are very advanced armaments, tons of technology in these things. These things are computers on treads. And they're a newer kind of design, I guess. So the world is different. The peace dividend clearly over for a long time. And even countries that haven't armed themselves ever or haven't armed themselves in decades are now arming themselves. Japan is spending a lot of money on defense. Countries all over the world, Europe is going to need lots of new equipment. I mean, when you think about the Ukraine war, I mean, it's amazing that, these equipment is a lot of this is like, World War II surplus and equipment, especially tanks that were used in like, the 70s and 80s. So I hate when I tug the wire on my headset. So that, the demand for new stuff is really incredible. And it's highlighted deficiencies in our own defense. We have gaps in terms of how much equipment we have and how much our NATO allies have. So there's going to be a spending boom for defense products for years. So I want to take a look at defense contractors. This isn't going to be a full-on expose on the different exchange-traded funds out there, but there's like 3 or 4 big exchange-traded funds going around. So I started looking at them, and some of them just have stocks that to me, aren't core defense companies. When I think of core defense, I'm thinking Lockheed Martin, Raytheon, General Dynamics. Okay, General Dynamics is the company that builds the M1A1 Abrams tank. Lockheed builds the super aircraft. So it's just an amazing industry, and clearly the industry is going to see business support, for decades to come. So that is one place to look. These stocks have already gone up, then they've gone down. But we have to take a look at least take a look at these and see what's going on. The next big thing is earnings. Another big number is 1.8 million instead of 1.9. Tesla was expected to maybe deliver 1.9 million cars for this year. They said 1.8 million, but their earnings came out better than expected, and they started a price where they drastically cut the prices of their cars. And it's not perceived as a bad thing; it's perceived as a good thing for Tesla. The stock has been going up ever since they did that. Why? Well, Tesla has such a big profit margin on their cars that they could afford to lower the price, still have a better profit margin than any other car company. But it's going to put a lot of pressure on other automobile manufacturers to cut prices too. And the other automobile manufacturers don't have nearly as much room in their margin to cut prices. Big auto companies just still have unions. They have legacy plants and equipment. They have legacy healthcare. They have legacy models. They still create combustion engine cars. So it's just the dynamic is really it's really extremely competitive in that industry. Boeing came out with decent cash flow numbers, but they had to lower guidance. Their earnings came out, they had to lower guidance because, parts and labor shortages. You can't just hire anybody off the street and say, let's work on the Boeing. I mean, the amount of training to work at Boeing is pretty substantial. They can't get enough people, they can't get enough parts, they can't get enough materials. And Boeing has decided, instead of promising more deliveries and telling companies they're going to, selling more planes, they're really going slow and saying, we've just got to basically focus on quality and build what we can perfect. And they need to, because after the debacle with the Max jets, they need to focus just on quality. They were always a high quality company, except for the last couple of years. They took a real hit to their reputation. So they're rebuilding and they need to focus on that. And I think long term, that is the best thing for investors. And I'm willing to wait. Just so you know, when I buy a stock, I was on with a conference call with an analyst who's a portfolio manager. And he said he bought Netflix. He sees upside until the next quarterly earnings announcements, like just before the next quarter, he wants to sell it. I'm like, it's just not for me. It's actually would be a pain in the neck for me to buy a stock thinking I'm going to sell it in the next 2.5 months. And when if I buy Netflix in 2023, it's because I want to be confident that in 2033 it's still going to be here and I'm going to make a lot of money on it. I'm really a long-term holder. And if it's something that I can't buy for the long term, I'm really not interested. I really want to I don't want stocks to go up 20, 30, 40%, which is great. I want stocks that could go up 200, 300, 400% over time. That's even better. And that's what I look for. Now, my clients, just humble brag, my clients who work with me for a long time, they see their portfolios and they're like, wow, I've had the stock for so long. Yeah, we hold on to stocks for a long time. And I'm not looking to buy and sell and sell and buy. It's just, you could buy and sell successfully like 20 times in a row. All you need to do is get stuck in one lousy stock that goes down, and it just not only does it wipe out all your gains, but your account value is lower. And on top of that, now you owe a ton of capital gains taxes. That sucks. When that happens, that's the pits. And when you're buying and selling successfully, like so many people thought they were hot stuff when they were trading during the pandemic from like mid 2020 to early 2022, like, oh, I'm so good at this. This is really easy. No, it was just an up market. So every time you bought and sold something, you made money, you went into something else, you went into something else, you kept doing it. It was just a good market. And that's what people do. They mistake a good market for their own genius. They become overconfident. John Kenneth Galbraith said that, don't mistake a bull market for genius. You didn't become smarter. It's just the environment. And I know that environments come and go. And when they go, it's brutal. You look at how badly Netflix did from its high, how bad Meta, which is Facebook, did from its high. So many stocks got crushed. All right. It's not what you make, it's what you keep. I want to be in good stuff that if it goes down, all right, I'm not too worried about it. I have a lot of blue chips. They go down. That's okay. Oh wait, the odds of these going under are pretty low, and I have a bunch of them, so I'm diversified. By the way, diversification is a strategy that you use that to mitigate risk, but it doesn't necessarily protect your portfolio from going down in the generally down market. Anyway, we're doing some talking. I want to run a quick intro just because we've got to get these disclaimers in here, and then we're going to go on with the show. Here we go. All right, we're back. So, you know, the issue with defense contractors is when there's a problem, they are looked at safe havens and opportunities to make money. Is buying these stocks? It's typically something you want to do when they level off. If we hear, for example, that the Ukraine conflict uh, goes, is solved. It's hard to picture that right now, but if it's solved or a truce is made, you're going to see these stocks probably trade down. Defense contractor stocks. Do you want to wait for that? We don't know if and when that happens, and hopefully the war doesn't become a wider conflict. Russia's trying to play the crazy man in the field. Putin says he'll do anything. He uses the word nuclear, like it's no big deal. Like, we're every time I say the word nuclear, I cover my mouth and I go like that. But he uses it a lot, and he says, well, then there's no more red lines. He's saying a lot of provocative things because he thinks he's going to make everybody say, oh, I'm so sorry we did this. Please take Ukraine. But we all know that he's a dictator. He's destroyed other countries. And after Ukraine, who's he going to go after next? Right? He's going to go after Poland. Poland always seems to be like the next domino to fall. Who's he going to go after? He's not going to stop. He wants to expand the Russian border right up to NATO countries. I don't even know if that's enough to stop. I don't know how many fronts he could fight. I don't know if he wants to attack Finland. Finland could become a NATO member in the not too distant future, and they share like a huge border. So we've got a lot going on, and I hate to think of destruction and war as an opportunity, but we are trying to make money here, and we are looking to be investors. So what else is there? Tesla's numbers are out. Okay, and this is pretty big news. It's the most widely anticipated earnings report. Tesla reports record revenue and beats on earnings. And you know what? Tesla cars are moving. There was a slowdown. Elon cuts prices to move more metal. And, Teslas are becoming cheaper in some regard. It's a strange thing with battery cars because the promise is as we build more and get economies of scale, they're going to start to get cheaper and cheaper and cheaper. But, I'm in the market for a new car, and I'm looking at some of these cars. I'm like, these are not cheap. These are like outrageously expensive if you can even get one. So I'm more of a hybrid kind of guy. I'm not really a full on electric car guy. I'm not knocking them, but if you have two cars in your family, one's electric, I think it works. I only have one car because I'm a solo parent. I only have one car, and I like the idea of filling up my car with gas. So I want to get a hybrid. In fact, I'm looking at one. I might actually get it tomorrow. Yeah, that'd be cool. If you have any questions, guys, definitely hit me up in the comments. I see Daryl is out here. Mitch Goldberg, the enlightener, keep dropping that science. Thank you from the thought scientist himself. Thank you very much, Daryl. And guys, while you're watching, if you wouldn't mind, it's very easy. Just give it a like. Just tap that like button or the applause button or the wow button, whatever reaction is available to you on your whatever social media platform you're watching me on. Say hello or just maybe say something in the comments like your favorite emoji. That does help me with the algorithm, it gets the show out to more people. Then I get more subscribers on my YouTube channel, and it's all good. It's all part of the package. Tesla beats, and Tesla all of a sudden is a hot stock again after getting crushed in the last couple of months. And Chevron, this is big, 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 big stuff. Chevron announces $75 billion buyback and dividend boost. The buyback starts April 1st. It's going to be massive. It's going to be about 20% of the company's market cap. Now that strikes me as odd that they would do such a big buyback. So I just want to say that, okay, about the buyback. This is not the first time Chevron has done a buyback, and other oil companies do buybacks too. What we need to consider is this: somewhere along the line, if gasoline prices go up, the price of oil goes up, somebody is going to say about politics that oil companies are not drilling enough, they're being held back. Now, Chevron could just as easily spend $75 billion on other things like drilling and alternative energy. I wouldn't ever pass a law, though, to dictate what they do, because it's a company. It's free market. If that's what they think is best, and other companies drill and oil demand continues to go up and price goes up for oil, those other companies could do better, and Chevron might regret this move. They could. But I just want people to know that $75 billion, which is 20% of the market capitalization of Chevron, it's just a massive number. So if Chevron comes out and says, we're not drilling enough, or there's something in the way of us drilling, yeah, we know what it is. They're just committed a gigantic amount of cash to buybacks. It's good for investors. I mean, if Chevron is in almost every ETF, it's certainly a component in the S&P 500. You can't invest into an index, by the way, but you can invest in a security that tracks or mimics an index. So Chevron is just a huge company, and Microsoft, which came out with numbers last night, and the stock was up $10 in aftermarket trading. Then it was down $10 in pre-market trading today. It ended the day down $1.43. All right. Chevron ended the day regular trading down $1.43. And just where is Chevron? Let's just take a look. Let's get a quote. Chevron stock was up a couple of bucks. Okay, it's up almost 2.5%, up $4 aftermarket, not too far from its all-time high. And while I got you here, let's I really meant to have this stuff out before we started doing this, before the show. So let me just go over the major averages with you. All right. That's not what I wanted. Here we go. All right. So Dow is up almost 10 points in the day. The Dow is down 400 and some odd points earlier today. So this is a pretty good recovery. Not a bad day considering what it was like. If you just look at the numbers now, the Dow is up 0.03, Nasdaq down 0.18, S&P down 0.02. That's as flat as you get. Oil up a little, gold up a little, 10-year yield is off a tiny bit. VIX is off a tiny bit. This was about as dull as a butter knife day you can ever get. If you looked earlier in the day, there was a lot of action, but start to end, this was basically a nothing day. Why? Because investors are waiting to see what earnings are going to continue to look like. They want to see what the Fed's going to do. The Fed meets next week, Tuesday and Wednesday next week. That's the first Federal Reserve meeting of the year. It's a Tuesday and Wednesday meeting, and the Fed will announce their new interest rate update Wednesday. We'll find out about between 2 and 2:15 p.m. next Wednesday. All right. And this just in, Facebook. This just in. while you and I are doing this, just came out. Facebook will reinstate Trump after a 2-year ban. This is why if you have that DWAC Digital World Acquisition Corp, you might want to think twice because Trump has a much better audience and reaches more people with Twitter, which he's allowed back on, and Facebook. And he's already thinking of not renewing his contract with Digital World Acquisition Corp, which says he's got to do his Truth Social post on anything 6 hours before he shares it anywhere else. But having like something like 80 million followers on Twitter is a big deal versus just maybe 3 or 4 million on Truth Social. So that's that's big news. So that's a really big piece of news. I'm surprised Facebook didn't get, well, who knows? Maybe some people will get off of Facebook. I mean, it's just more stuff in the news. I mean, it's just going to be more like, Trump said this, Trump said that. But, companies like Facebook and Twitter, I don't think there's bad controversy for them. I think controversy is just good for them. It keeps people engaged. It's advertisers, I think the social media is just a rapid way to play on our animalistic, visceral reactions. But I think it's good for social media stocks. But if Trump is back on Facebook, well, he didn't say he's going back on Facebook, by the way. Just that Facebook will reinstate him. Trump might say, screw you, I'm not going on Facebook. He might say, screw you to Twitter too. But I don't know if he could resist. He's facing potential charges, right? And in Georgia. And he's facing potential charges with the classified docs. Maybe that keeps him busy and active in that regard. Maybe his lawyers told him, we don't want you on any social media anymore because you've already admitted to things that you shouldn't have by posting angry things. Who the heck knows? Okay, we're just speculating. But this is all fascinating and very interesting. And that's really about it for the day. It was a dead day. It's like really hard to spin some, earth-shattering news out of this day. I'll tell you this. I saw a news report today about mortgages and said mortgage apps jump. No, they just went up from a very low base. So it looks like a lot. But no, I wouldn't say jump. You're going to see so much hyperbole in the news. You always do. I'm not one of these people who's anti-news. I follow some wonderful journalists and very happy just that we speak. So what do we do with this? This is all fun to talk about. And I want to talk to you more about the Secure Act 2.0 because there's so many goodies in that. But this is just, what people want to hear about right now. So I'll just leave you with this before we hop off. I'll leave you with one thing. If you're a business owner or just, it doesn't matter if you're really a business owner, but if you're in a simple IRA or if you have a SEP IRA, you can now make Roth contributions to those. There's a Roth component to those, which I think is incredible. That means instead of claiming a tax deduction on the money you put into these kinds of accounts, these types of IRAs, you can now do it like a Roth. So forget the upfront tax deduction you get, which is this big, and think about the giant tax savings you're going to have in 20 or 30 years when you start taking money out. Okay? You're like inflation proofing and tax proofing your retirement every single time you put money into a Roth. I want to tell you, I am not a tax advisor. I'm not your CPA. I'm not your mama. I'm not your papa. And I don't give tax advice. And none of this should be construed as individualized tax advice for you. You need to speak with your own tax advisor for your situation. Boom. But that is incredible. You know what else? The reason why in the year 2035, IRA required minimum distributions are going to be raised to 75 years of age. And the reason for that is because people who were born 1960 and later now can wait until they're 75 to take an RMD. And people who were born at 60 are turning 75 in 2035. They say 1935. And 2000, you're probably looking like, what the hell is he talking about? 2035, which is why that rule starts in 2035. And you know what else that's really, really cool? If you are in a Roth 401k, simple SEP IRA, a Roth component, even though you don't, when you take the money out of those, eventually you don't pay taxes on the money you take out, you still have to take an RMD from the 401k into the IRAs, right? And simple and SEPs, the rule, those same RMD rules apply because eventually you'll make them into a regular traditional IRA. But for a Roth IRA, if you have a 401k Roth and then you retire, you move that money into your Roth IRA, you do not have to take an RMD anymore, just like a regular Roth. I mean, to me, this is like such substantial stuff. Do you guys get excited about hearing this stuff? I do. All right. So I'm going to leave it at that. We're talking long enough. There's so much stuff to talk about in the world of finance, from the stock market to taking advantage of Secure 2.0 Act to bolster your retirement. And we talk about credit. We have to talk about credit soon. All right. So I'm going to end it. Hey, guys, I'm going to be on the radio tomorrow morning. I'll be broadcasting right here on Facebook and LinkedIn and Twitter and YouTube, just like I am now. So please tune in. It's going to be the way you get your business day started. And thank you so much for joining me. And I'll see you tomorrow. Have a good night.